Holy smokes, everyone. You're not going to believe what is happening in the stock market right now. For the last 2 months, I've been watching the markets very, very closely, and I've been noticing a new trend. As we know, growth has slowed. The stock market is slowly eking out or grinding out all-time highs, but the growth has stalled. And lately, I've been seeing that it looks like the stock market wants to correct. We're having more and more strategists and analysts and normally stock market bulls come out saying that at least a 10% correction is due. And for the last month, it doesn't seem to be going anywhere. It's a day of red, then a day of green, a few days of red, then a high day of green. So who is it or what is it that keeps coming in and buying up the dips and is stopping this downward pressure that is mounting up? So I've been doing a lot of research to see why this has been happening, why this downtrend that everybody is expecting hasn't come yet. And people have found the answer. Let's have a look. This is why, everybody. Bank buybacks have hit a record, propelling stocks to all-time highs. That's right, everybody, a record. Now, we need to have a little history lesson because the best way for us to predict the future is to learn from history. Now, stock buybacks are quite normal. They often happen, but right now they're at all-time highs. And what actually happened before the greatest stock market crash in history in 1929? Well, JP Morgan arranged a meeting with the US largest banks, and what they did is they started buying up shares like they're doing today to prevent the ultimate crash that was coming. But let's dig a bit deeper and have a look at the specifics, what they're really doing, everyone. So listen to this, everybody. Financial weekly buybacks were the largest on record since 2010 and is almost a record as a percentage of the market cap. So let's have a look at this chart, everybody. We can see the biggest buyers right now are in Exhibit 43 are financials. The financial institutions are the one buying back the most stocks. But something very interesting that they're doing is they're not buying small caps. They're not buying mid-cap stocks. They're all buying large cap stocks. And do you know most of the stocks in the S&P 500 right now is already in a correction, but most people don't know about it. Look at this, everybody. The big names are gone as corrections hit half of the S&P 500 stocks. So the S&P 500 has gone 34 days without a 1% gain. That is the longest in 20 months. So what that means is it means the smaller companies and the medium-sized companies are getting smashed, especially from the pandemic. But the large, huge institutions that have accounts set up with the Federal Reserve, and whenever they need money or if ever they're in trouble, they can get cheap credit at 0.75% through the Federal Reserve's funding facility. They're doing great. The financial institutions are taking that cheap credit and buying back their own stocks. They're not innovating. They're not investing in better equipment, better technology. They're not growing, expanding. They're not hiring more people. What they're doing now is they're just saying, look, we'll just buy back some of our own stocks. And this is why bubbles kill innovation and productivity and investment and making society better as a whole, because people say, why should I bother having to think or invest or take risk, hire people? All I'll do is take cheap credit, put it in the market, sit back and make money. So everyone, this explains why the stock market hasn't fallen like we've all expected, and it would only actually fall when they want it to fall. Because what happens time and time again, these banks, they create boom bust cycles. And right now we're in a boom cycle and we're in euphoria in the stock markets. And what they do is they try to drag in all the retail investors to buy the top. They'll slowly start selling, and then all of a sudden, all these buybacks will be taken out. They'll pull out all the support for the stock market, let it crash. People will sell or lose a lot of their money, and then they'll come in and buy up the dip for pennies on the dollar. And then rinse and repeat. This is what they do time and time again. But if these buybacks do slow or stop, well, then I don't think they're going to have all this buying pressure in the markets for much longer. So everyone, I thought this was very interesting, and it was a good insight to see why the market hasn't dropped, why we can't seem to get this downtrend that we're all expecting. But what do you think about this, everyone? Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.